Guys, you have to hold on to AMC, diamond hands, and to the moon. In this video, we will be going over the biggest gains and how trading AMC can make you a ton of money. So be sure to smash the like button. AMC Entertainment Holdings has crushed the market this year, with the stock surging 2,080% since January. However, the Reddit-fueled enthusiasm surrounding AMC has also made it a very dangerous investment. Over the past 6 months, retail investors have orchestrated campaigns across social media, urging people to buy the stock. They've done so in the hopes of sparking a short squeeze, an event that occurs when rising prices force short sellers to cover their position by purchasing the stock, creating a snowball effect that sends the stock price even higher. Unfortunately, that type of short-term thinking is tantamount to gambling. There's no guarantee it will work, and many retail investors are likely to get burned in the process. Before the pandemic, the movie theater industry wasn't doing so well. Between 2010 and 2019, box office revenue grew at less than 1% per year. But things got much worse when the coronavirus forced theaters to close. After shutting the doors, AMC was left with over $4.7 billion in long-term debt and $5.0 billion in lease liabilities, but virtually no income. In fact, attendance and revenue plunged 79% and 77%, respectively, last year. And despite the reopening of many theaters in the first quarter, attendance and revenue continued to fall, dropping 89% and 84%, respectively. Even worse, AMC was forced to issue more debt and sell new shares throughout the pandemic. And while those kept the company in business, its financial situation is now dire. Long-term debt has ballooned to $5.4 billion, and the company's balance sheet is insolvent, meaning it has more liabilities than assets. To that point, the company recently raised $1.2 billion in equity during the second quarter, and while that decision makes sense, as it allows AMC to convert its soaring share price into currency, the move also further dilutes shareholders. Notably, since the end of 2019, AMC outstanding share count has surged 380%. Moreover, even after this recent at-the-market offering, AMC is still in trouble. In fact, in order to meet its minimum liquidity requirements, i.e. pay rent and interest, attendance must reach 85% of pre-pandemic levels by Q4 of 2021. If that doesn't happen, AMC would have to restructure its liabilities, either by liquidating assets or filing for bankruptcy. And in either case, shareholders would likely suffer a total loss of their investment, according to management. Moreover, AMC credit rating, currently at KOH3 in Moody's rating system, indicating substantial risk, would be further damaged for years. That's why I wouldn't buy this stock with free money. AMC shorts have not been sleeping well this year. With the Reddit community united against them, bears have raked in sizable losses in 2021. Wall Street memes talks about this epic 8 vs suit battle today. Hodlers have been winning for now. But with the recent drop of 27% since AMC mid-June peak, short sellers have clearly not thrown in the towel. Will AMC finally go to the moon, whether it is $100 per share or the $100,000 that some crave? Or will meme mania fizzle out? AMC short interest is currently around 17%, according to data from Yahoo Finance, the equivalent of $4.8 billion in short positions. As 3 research reports that during the month of June, short sellers incurred losses of $2.8 billion on AMC shares. This was the U.S. stock that inflicted most pain to short sellers, followed by Tesla. As a side note, and unlike AMC, GameStop shares saw sharp short seller retraction in the last month. Reddit is one of the main thermometers for ape sentiment towards AMC. In fact, the number of mentions and positive comments on the platform has been correlated with the stock's price movements, as the chart below illustrates. A drop in the volume of bullish comments may have contributed to the recent decline in the share price. Despite the recent cooling down in bullish pressures on AMC, the war is probably far from over. For as long as there is still elevated short interest in AMC, resilience to endure the recent losses and renewed buzz around the stock, another short squeeze is not out of question. AMC investors have heard it all before, and they maintain that they are not going anywhere. The stock price was meandering between positive and negative territory before the bears gained control and sent shares lower by about 3%. AMC is banking on consumers continuing to return to the box office this summer to bolster its sales. Otherwise, Loop Capital's theory that the movie chain is carrying too many screens could be proven right. This weekend, AMC is touting films such as Black Widow, starring Scarlett Johansson and William Hurt, as well as The Forever Purge, featuring Ana de la Reguera, Will Patton, and Josh Lucas. The company also announced the release date for the upcoming Chance the Rapper Magnificent Coloring World to its theaters on August 13, the tickets for which go on sale next week. So be sure to subscribe and like for more AMC stock news.
Mike, we're going to start off with you, as we always do. How would you summarize this week as we end here on a high note on a Friday?
You know, just the smallest of gut checks. It's yet another one of these real mini shakeouts, I think, that have kept a little bit of a wall of worry in the market. I mean, I know it was almost nothing. It's on a long-term chart. Yesterday's decline is not going to appear to be much of anything. But the fact that people are, a little bit hesitant to just believe we can continue to grind higher has helped, believe it or not, the resilience, because you do have these kind of shakeouts of hot or low conviction money, and that's what's gone on this week. Now, we obviously had an extreme run in yields back down to levels where they were very much on the verge of breaking down. They didn't. Something similar happened with all the cyclical stocks. They got right to that point where you'd say, well, maybe they gave up their leadership status, but they didn't. So we'll see how it goes. I also want to just throw a reminder out there that a week ago, Friday, after the jobs report, we had another flawless one-day rally that just levitated to a new record high, and it didn't have a lot to say about how the following week was going to go. So nothing says that this is the way the rest of the summer plays out.
Mimi, what's your take as to whether you want to be tilted more towards the cyclicals or the big cap tech names for the rest of this year?
Yeah, so we're a bit more cautious on tech going forward. We've reduced our overweights there. One thing that leads us a bit more cautious there is the potential for tech regulation and the regulatory backdrop shifting in the second half of the year. So that's sort of our stance right now.
Charlie, where do you think the Fed policy should be heading? Of course, we don't know exactly what the CPI data is going to look like next week, but we know Jackson Hole is coming up, as well as another Fed meeting. Do you think they need to begin to change their language ever so slightly about the path forward?
Well, there's what I think they should do, and there's what I think they will do. What I think they should do is get ahead of the tough inflationary environment that I think we've got. I think they're still acting like we're in a recession and have an unemployment problem, and so they say that they think inflation is transitory. So I think they should be sending signals that they're going to stop buying $120 billion of bonds every month. I don't think they're going to do that. I think they're being pretty stubborn here, and they're going to keep their posture for at least a couple more months in the face of what I think is undeniable data that the economy is strong and that inflation is high.
Mike, is the market now comfortable with CPI next week being very hot? Or if it is hot, given that inflation expectations came down with yields, as you mentioned, is that just going to spook the market all over again, a repeat of a couple of months ago?
Well, I guess we have to define what hot would be.